Ladies and gentlemen, welcome back to the channel. Tesla stock had a big day today, but in this video, we're going to discuss what's coming tomorrow. Something big is coming tomorrow, and it's pretty safe to say what that is. What is that? That is the cheaper, lower priced Tesla. Now, in this video, we will discuss what kind of an impact that could have on Tesla stock. How important could this be? Well, could be very important. And it could cause a massive rally in the stock. So we're going to take a look at what the shorts did today, what the option activity is signaling. In fact, what the stock is pricing in the options market by this Friday. If you guys did not know, options for any given expiration, if you calculate them, will tell you exactly what the stock is pricing in for that period. I will tell you or show you what Tesla stock is pricing in by the end of this week. Is Tesla pricing in a 7% move? Is it pricing in a 10% move? Is it pricing in a 20% move? That can give you a little bit of an insight to maybe how important tomorrow's news is going to be. With that said, I also have a clip from Tom Lee this morning, and it's been a while since we've heard from Tom Lee, so let's get a new update on how he feels about this market as stocks just continue to climb. And honestly, I think that's going to continue. You know, there's some very powerful forces driving this market that we'll talk about in today's episode, but most importantly, it is an AI Cold War with China. Before we get into all of this information, hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. I did just go out and put $16,000 into a brand new stock, okay? What we really do over there in a nutshell is I'm looking for under the radar, discounted opportunities in the hot themes for the next 10, 20, 30 years. Now, these investments, I typically give them time to work, right? If I take a stake in a undervalued AI company, for an example, like I do the due diligence beforehand, so I'm not worried about what happens in the interim, right? I like to give them, months to work out. I really go into those stocks with like a 1 to 3 year time horizon. Okay. In AI, robotics, energy, gene editing, biopharma, quantum, these are going to be main themes for the next 10 years. And you almost can't afford to not be investing in those kind of names. Now, it's important where you buy a company, and if you're buying quality stocks early at a discount to peers, in theory, that should be a winning strategy, and that is what we are doing, and that is why our portfolio is up over 200% year to date. I believe we're outperforming all hedge funds and institutions. I don't know of another firm that has returns even close to what we are pulling off. Obviously, not a recommendation. It's not financial advice. Contact a financial advisor if you have any questions or before you make investment decisions. And honestly, just don't be a jackass. Take accountability, take responsibility for the decisions that you make. But with that said, let's get into the big catalyst coming tomorrow. And it's clear, the day is finally here. Tesla's cheaper model is about to be unveiled to the marketplace. Now, Tesla, in the past month or two, I would say, has been kind of morphing into a different company. It's been morphing into a company where Wall Street, yes, they care about deliveries. Yes, you want to see the auto business do well. But the auto business is becoming less of the main story for Tesla and more of just another component of Tesla. The main story for Tesla is slowly but surely becoming its AI projects, Optimus and Robotaxi and FSD. Which it should, because that's what's going to drive the profits. That's what's going to drive the stock to a 10, 20, $30 trillion valuation. It's not the auto business. But Tesla selling more vehicles can sell more FSD, can get more people onto the robotaxi network in due time, can boost one aspect of Tesla's business, okay? Boost even popularity, right? So Tesla launching the cheaper model is a great thing. And I'm assuming that's what it is. Could it be the Roadster? Sure, but highly unlikely. Highly unlikely. It's most likely the cheaper, lower price Tesla coming out tomorrow. Now, I'm sure you'll be able to order it relatively soon. Deliveries probably start by the end of this year or something like that. This also does something big from a management perspective. It adds a lot of credibility to what Tesla's management team says. Since the start of this year, we've heard that the cheaper, lower price Tesla was coming out this year. Now, Tesla did delay this to the second half of the year, but Tesla still, even in the face of a lot of doubters, we're like, yep, we still plan to launch the cheaper model this year. It was rolling around like July, August, and you're like, well, timing is kind of running out. And boom, we're going to get this news tomorrow. It adds a lot of, again, credibility to the management team. The next time they say something, people are going to pay attention. Now, specifically, one thing that comes to mind is Optimus. The management team at Tesla has said that Optimus should be, seeing some kind of commercial application, some kind of commercial contracts with other companies by the end of next year. Okay, it adds credibility to that timeline, which is big, obviously, for the Tesla story at this point. But just add this, Tesla launching a cheaper Tesla, to all of the other bull cases for Tesla right now. Shareholder meeting, November 6th. Elon's compensation package. Tesla investing in XAI. FSD V14 coming out at any moment. Robotaxi expanding into new cities. Elon, like literally just back at Tesla. Back in wartime CEO mode, as Dan Ives puts it. And now add the cheaper, lower priced Teslas actually coming. And you have positive catalysts that are stacking on one another. And I do think, assuming we get the new lower priced Tesla tomorrow, hopefully it's not just a stripped down Model 3 or Model Y. Hopefully it's something a little bit more unique that actually prompts people to want to buy it more than, just cannibalizing the Model 3 or the Model Y. This could cause a pretty explosive move in Tesla stock because, yes, I talked about this already in this video. Tesla is morphing into an AI company, into a robotics company. But there's a lot of Wall Street that still really cares about Tesla's auto numbers. And this is going to cause upward revisions to Tesla's auto numbers. This is going to cause upwards revisions to Tesla's EPS numbers and profitability metrics for next year. So from a simple business perspective, Tesla launching a new product, a cheaper vehicle, is a massive positive for the stock. There is no other way of putting that, okay? That is the only way you need to put it and think about it. Now, for Tesla stock today, option activity from institutions, you had 189 different interesting trades totaling $195 million with a positive order value of 78%. Volume today was 67% calls and 33.23% puts. So very, very healthy. Now, short interest of free float sitting at 2.94%. $35.5 billion sold short in the stock, totaling 82.5 million shares sold short. And it looks like today you had about 344,000 shares that were sold short. There is a large short interest in Tesla. Even though it's only 3% of the float, there's 85.5 million shares sold short. So I think part of tomorrow's move is going to be a gamma squeeze and short sellers starting to cover on some of their short positions. If you were already a short seller and you were nervous about Tesla stock today, imagine the pressure after tomorrow. Now, I will also point out that on Thursday and on Friday, following Tesla's delivery numbers, Tesla stock was a $471 stock, roughly. A little bit below that, but roughly $471 per share. It sold off a bit, okay, on really good news. So what does that mean? Well, that good news sell-offs never last, right? That's never the start of a larger decline for a stock, right? So we just had really good deliveries. Now we're going to get the cheaper, lower price Tesla. I could see a pretty parabolic move tomorrow, anywhere from 7 to 20% higher. Say 7% higher on the low side puts the stock at about $483 per share. 10% puts the stock close to $500 per share. 15% move puts the stock at about $519 per share, and a 20% move puts the stock at about $542 per share tomorrow. Those are the kind of upside targets that I'm currently looking at. Now, if we look at Tesla stock by Friday and what the markets are pricing in, all you do is you go to a strike that's close to the money, like the 450 calls here, okay? So you put the premium here, $13.20, which in option terms is $1,300, but you're going to use the options premium, right? The way it looks on the chain, put that in the calculator. You're going to go to the put side on the same expiration, and you're going to add to the 450 put to this, and you get $25. So that's effectively what the stock is pricing in by Friday. The stock is only priced to be about $475 to the upside or $425 to the downside. Now, if you want the percentage on this, you divide it by where Tesla stock is currently trading at, $450.44. That's only a 5.5% move by Friday. That's not pricing in a lot. Now, again, the stock is up like 5% today, so take that into consideration. But you're only pricing in a 5.5% move. So, yeah, if we do get the cheaper, lower price Tesla tomorrow, people are going to be surprised by that. A gamma squeeze could be in the cards. Just because of how little the stock is pricing in, you could start to run through these. Again, like look at the 460 call expiring this Friday, 44,000 in volume, 12,000 for open interest. As the stock gets to 460, let's say, what happens is the market makers, they take 80-90% of the back end of these options. So the market makers have to give you stock at $460 by Friday. Well, what if the stock goes to $470? The market makers would lose a crap ton of money. So what the market makers will do is they'll go out and they'll buy stock at $459 a share so they can give it to you at $460 and make the difference, right? And it's a lot more minuscule than that. It's not $459, right? It would be like $459.95 or something. The market makers would go out and buy the stock for. It's not, the spread's not that big, but for simplicity's sake, you get the idea. As the stock goes up and could be a much larger than expected move and starts to run through all of these strikes, you start to get market makers that need to buy a crap ton of stock. Okay. So when you're only pricing in a 5.5% move, if we get a 10% move, that's massive. That is huge in terms of potential gamma squeeze. Let alone anything higher than that, it just gets crazy for Tesla. So those are some of my thoughts on this. We'll see what the specs are. We'll see if it's a stripped down Model 3 or Model Y. If Wall Street thinks it'll cannibalize the Model 3 or the Model Y, maybe that doesn't give us as good of a result. Preferably, you want something that is not a stripped down Model 3 or a Model Y, something that is a little bit more unique, that's not going to cannibalize Tesla's other products. And I think Elon gets that. I think Elon wants to impress. I think Elon wants to deliver shareholder value at this point. So I would be surprised personally if it's a stripped down Model 3 or Model Y, but that would be the one thing that I would say markets might not react so great to. But again, we'll see. Now, with that said, take a listen to what Tom Lee said on CNBC today. This clip is titled, "This is the most hated V-shaped rally."
This a bunch of time. The market seemed to be shrugging off the shutdown, valuation concerns. What do you think is going on? Why do investors just continue to feel confidence?
Well, Frank, I think there's two underlying fundamental drivers for the economy. One is that we know there's a tremendous capex tailwind from AI. And the second is that the Fed's been on hold for 9 months, and it's kept the ISM below 50 for now 31 months, and the Fed's dovish. So that's the rest of the economy getting basically a lifeline. Those are going to be powerful tailwinds that even a government shutdown doesn't really change the story around. And now that we're in the seasonally strong fourth quarter, and valuations, I just don't think are that demanding because, NVIDIA is still at 26 times earnings. I mean, I think stocks still have a lot of upside into year end.
All right, really quick. You're talking about ISM manufacturing, right? Still in contraction. You're saying the Federal Reserve rate cuts, if we stay on this path, that boost the manufacturing sector. Is that the point you're trying to get to?
Yes, that's right.
Okay.
So the manufacturing sector has been cautious for 31 months, the longest stretch below 50 in history. And, that's business confidence. It's highly correlated with earnings growth. So I think once that moves above 50, that means we're back in expansion mode, and it's good for financials and small caps, and the tech trade continues. So I think it's a broad-based rally.
I think a lot of people think it would be good for transports, energy prices. I think, as you mentioned, it would have impacts across the board if we see a boost in U.S. manufacturing. Okay, I want to get to your word of the day. It's dovish. Now, this is interesting. Your word's dovish, and you're dovish because the Fed didn't get the jobs report and might not get other reports. Why are you dovish, or you think the Fed's dovish, despite that critical information?
Well, the Fed has, I think, on balance, has to be more dovish than what they said they would be last month, because a government shutdown, as you know, disrupts economic activity. So even though they're not getting reports, there's also a standstill in GDP, and the government is a very large share of GDP. On top of that, it causes confidence to be weaker. A shutdown makes people nervous, and so the Fed will have to be even more dovish, and I think that's why stocks can rally even more than they have already.
All right. You're also looking at seasonality. You alluded to it earlier. According to your data, since 1950 in Q4, we see just about an average rise of about 5%. But when we're talking about seasonality, are you sure this isn't an outlier year? As we mentioned, a government shutdown, companies trying to deal with tariffs. We're seeing a trade war between the U.S. and China continue. It hasn't quite been resolved yet. I mean, aren't there some issues that could maybe shake the seasonality here?
Yes, that's right. I mean, seasonality is just a base case. So things can make it different. But this year we're going into the fourth quarter where sentiment, I think, is still really muted. If you look at things like AAII net bulls, it's barely positive. After a 30% rally in stocks, historically, you'd be solidly positive on a 20-week moving average of that number. Investors have really been skeptical of this entire rally. That's why we call it the most hated V-shaped rally.
All right, I want to get to your pick as well. Your pick for us today is financials. Now, is this on the idea that the Fed is dovish, rate cuts help, boost the yield curve, and that helps financials? Or is there some other reason that you're saying that you would put money into financials right now ahead of earnings?
Well, I think financials have also fundamental tailwinds because we know the Fed is going to be dovish, which is helpful for economic activity. But on top of that, AI is a tool that the financials industry can leverage. It's going to help them root out fraud. It's going to help make their businesses more profitable. And it's something we've talked about at Fundstrat, which is the financials may end up getting technology valuations, especially given blockchain and moving from traditional financial rails onto blockchain and becoming more efficient.
All right. You're also a big believer in Ether. So you're saying financials companies, especially, you say, are building on Ether. Is that a tailwind somehow? The fact that they're building? Oh, sorry. Did I cut you off?
Yes. Yeah, absolutely, Frank. Keep in mind, Exhibit A in all this is Tether. It's the largest stablecoin issuer in the world. It's valued at $500 billion, or about 25 times earnings. It makes it the second largest bank in the world behind JP Morgan. And it shows you that by building on the blockchain, a business can really reduce cost and be a lot less employee intensive. Tether only has 300 employees compared to JP Morgan, which has 313,000 employees.
Okay.
So Tether's valued at around 1.8 billion per employee, JP Morgan around 2.6.
Okay.
So you can see the leverage coming from Ethereum.
So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.